One of the core ideas behind Boglehead-style investing is choosing a long-term asset allocation and staying disciplined through market changes. Many passive investors build diversified ETF portfolios, continue investing consistently, and then rebalance periodically back toward their original target allocation. But over time, even passive portfolios naturally drift. And that means the portfolio's risk level may slowly change as markets move. In this example, I'm using the pre-filled hypothetical portfolio inside the Alignfolio demo. This is not a real portfolio or investment recommendation. It is simply an educational example showing how portfolio drift and rebalancing work over time. You can also enter your own portfolio and target allocations directly into the demo. I originally built Alignfolio because I wanted a simpler way to visualize portfolio drift without relying on spreadsheets or brokerage syncing. Here we have 4 asset classes: U.S. equity, developed markets, emerging markets, and bonds. This hypothetical portfolio currently contains approximately $27,000 in U.S. equity, $37,000 in developed markets, $29,000 in emerging markets, and $17,000 in bonds. Each asset class also has its own target allocation. In this example, the portfolio target allocation is 20% U.S. equity, 30% developed markets, 25% emerging markets, and 25% bonds. At this point, we can compare the current allocation against the original target allocation. Over time, some asset classes grow faster than others, and eventually, the portfolio slowly drifts away from its original target allocation and risk profile. In this example, U.S. equity has become overweight relative to its target allocation. Developed markets are also overweight. Meanwhile, bonds are underweight by almost 10%, which represents the largest drift in the portfolio. Even though the investor did nothing wrong, the portfolio gradually became more aggressive than originally intended. This is one of the main reasons long-term investors rebalance periodically. Not to predict markets, but to stay aligned with their original investment plan and risk level. The drift analysis section helps visualize exactly how far each asset class has moved away from target. You can immediately see which positions are overweight, which are underweight, and by how much. The drift history section also helps visualize how the portfolio changed over time. You can see that some asset classes remained relatively stable, while others drifted farther away from their target allocation as markets moved. This is how passive portfolios naturally evolve over time, even without trading. In this section, you can also see a simple summary showing how much the portfolio is currently overweight and underweight. This helps visualize what adjustments may be needed in order to bring the portfolio back toward its target allocation. Traditionally, investors rebalance by selling overweight positions and buying underweight positions. But many long-term investors prefer not to sell, especially in taxable accounts where selling may trigger capital gains taxes. Another approach is to rebalance gradually using new cash contributions. Instead of selling investments, new money can be directed toward the asset classes that are currently underweight. In this example, more new cash would go toward bonds, while less new money would go toward U.S. equity and developed markets. Over time, this can help bring the portfolio back toward its original target allocation without needing to sell existing positions. And it instantly answers the question, where should I invest my new cash? So instead of asking, what should I sell? A simpler question may be, where should my next dollar go? Rebalancing is not about predicting markets. It's about maintaining discipline, controlling risk, and staying aligned with the investment strategy you originally chose. This is just a simple way to visualize portfolio drift and portfolio allocation using Alignfolio. There's a free demo available if you want to try it with your own portfolio. If you found this video helpful, please like and share it. And if you have any questions, feel free to leave them in the comments below.